Good morning, traders. Welcome to the TMT Stock Market Strategy video for Thursday, December 17th. Well, as we all know, Janet Yellen raised rates 25 basis points. Markets liked it. Well, markets were a little bit uncertain, actually. We sold off a little bit, which I did mention. That's that knee-jerk reaction. And then the market started to rally towards the end of the day. And the asset classes that really didn't rally, didn't sell off, such as the gold and crude oil, dollar really popped up a little bit. I think you're going to see that change today, and I get a lot of emails. Should you trade the Fed? Should you not trade it? I personally am in a camp of stepping aside because nothing happens until the Fed, and then after 2 o'clock, you have all of these orders kind of fighting for the long side, the short side, and really what you get is just this massive chop up and down. Why risk capital with something like that? There's really no edge. Now, as the uncertainty's out of the way, markets should like that the uncertainty's out of the way, and we are going to head into an interest rate environment. That being said, there's going to be a lot of repositioning of portfolios, and of course, closing year-end stuff. So there's going to be a lot of stuff going on between now and the end of the year. I also think that the volatility will continue into 2016. Okay, now the short of it is that we're probably looking for the markets to rally with some down days and some chop. Markets usually hold up going into the end of the year. Do we have the Santa Claus rally in effect? Well, that's yet to be seen. We still want to see how the markets are going to react today, tomorrow. Remember, guys, we have options monthly expiration. We do have usually a bullish bias to the upside. And with the interest rate decision out of the way, I would suspect that we'd probably rally, maybe sell off. I'm looking for buying of pullbacks into support today and probably tomorrow unless something really changes, okay? Markets are up about 5-6 handles in the Globex session. So looking pretty good that we'll probably have liftoff, that we're ready to go to move higher, into new highs. I am going to show you the dollar, gold, and crude oil as well as the indexes today. But we're going to really have to wait for a couple of days, get into next week, and really see what happens. Now, obviously, we have the holiday week next week, but we still have at least a good 2 weeks of trading, okay? And I do think that we should get some fireworks going into the end of the year. Now, after the end of the year is over, it's a whole different ball game. I do think the market divergence that we had all year will probably take effect going into early 2016 in January. All right, so let's take a look and see what we have here. All right, so right now, we're looking at the U.S. dollar. I've showed you this before. We have a beautiful bullish fallen wedge, which we broke out of that wedge. You can see that right about here. And let me just grab that, get that out of the way. Sorry about that. So we do have that bullish fallen wedge right up in here. And you can see that we literally broke out of it. And if the dollar is going to rally, which right now it's coming into seasonal strength and it rallies up until mid-February, the end of February, I think it's going to put pressure on the commodity sector again, as well as the interest rate rise. Take a look at, and I want to show you, take a look at the gold and the crude oil. Here's the GLD. And you can see here we had a nice big move out of this bullish falling wedge. Now, the regular gold contract is still in a wedge formation, but the GLD, the ETF tracking, is out of it. And you can see here that we fill that gap right up in this area here. You can see this area. Now we're at the lower end of the gap. And quite frankly, I think gold goes lower, and I mentioned that for the last couple of weeks. I've got a few emails. Well, what do you think? I know the gold bugs. I get it, but when we have an interest rate environment, we have a strong dollar, gold will go down, and I think gold will break 100, and I think the area of the 980-ish is where I want you to start looking to buy gold. The contract itself, gold stocks are even, and also GLD a break below 98. Break below 100, you're looking at 98-ish, and that's something where I will be looking to entertain to buy gold. I wouldn't buy gold right here at the moment. I do think that gold does go lower, okay? Now, crude oil. Well, what about crude? Well, I do think that crude oil goes lower too. Remember I mentioned, and I did get a bunch of emails, hey, what do you think about crude? Looks like it's base. And I go, well, a couple of days doesn't make a trend. I think crude oil as well will go lower as long as you have a stronger dollar, at least at the moment. I think crude oil will flush lower into that 10.5, 1060 in USO, and then start to nibble, and I mean nibble lightly with very little shares just to see where USO goes, okay? Now let's take a look at the indexes. Well, I mentioned here we had this bullish fallen wedge. I'm sorry, not a bull flag, a bull flag. Apologize. We had a bull flag here, or we had this M formation, right? We see this M top. You can see here, and I said we don't know which one it is. Well, we still don't know, right? We still have this M formation, which we did not trigger, right? Here's the neckline right up in this area. To me, looks like probably a bullish falling wedge. We got the RSI coming breaking down to 30, so we're not overbought anymore. And I do think that if we take this area out, we'll probably challenge the highs up in this area around 2100. Okay, so that's what I'm watching, and you'll see some of the other charts. Here's the transports, and this is a really ugly looking chart. I've showed this to you many, many times. You can see the symmetrical triangle. We broke that, and now we're kind of back testing. I mean, it has so much work to do to even become bullish. But again, we're oversold here in the RSI as well as MACD. So even if we flag for 4, 5, 6 days, I do think that the transports are telling us a big warning sign for 2016, guys. I really do. It's something you really have to watch carefully. The transports and, of course, the Russell. Here's a Russell again. Big, large symmetrical triangle, very similar to the transportation sector, and that's breaking down. Now, about the Russell, watch carefully the next couple of weeks. You could get a real nice trade in the Russell 2000. Of course, I will mention it. The Russell comes into seasonal strength now, and it could play at least catch up to the other indexes like the S&P and the Dow and the Nasdaq. Because if the Russell does catch up, it will explode higher. It'll help at least the market stabilize and start to make new highs. And it could possibly have the S&P make new highs, or at least challenge the highs, with the Russell rocking and rolling to the upside. Now, that hasn't happened yet, but just keep that in mind. Watch the Russell, because if the Russell starts to explode higher, that's just going to be seasonal strength time of the year where the markets do move, and then you're going to see every other index move higher with it, okay? At least until the end of the year. All right, now you take a look at the diamonds. Same formation. You have this either bull flag, real nice bull flag where we're at the top of the channel, or this M formation. It looks like to me, guys, if we take a look at seasonal time of the year, strength, the uncertainty out of the way, I think we're going to break out, and I do think that we'll probably challenge the highs before we get to the end of the year. So here you go. Beautiful bull flag. Let's see what happens here. And hopefully, if that's the case, I'm looking to buy pullbacks. And don't fight it. If you think that the markets shouldn't be up here, whatever, it's not what you think. It's how the markets react to news and what the markets are telling you, so you can get your trading plan in order, okay? Lastly is the Qs. You can see here again, another M formation or a nice bull flag breaking back above it. It looks like to me that it's going to be a bull flag breakout. And once that does break out, guys, don't be short. Don't look to fade the top here. You have a lot of shorts involved, a lot of stops above, a lot of stops below here. In the meantime, you're in a trading range. Once you break out, I'd be looking to buy pullbacks yet again. And like I mentioned before, I'm going to look to buy pullbacks today and tomorrow alone, just because it's options monthly expiration, which we get at bullish buys. I hope it helps. See you tomorrow, guys.